Hey guys, Casper here with the last video of the day. A different one. We're looking at the big guys within mining, mostly gold miners, but also some silver miners and a mix. But we will look at it in relation to the underlying commodity to that company. It gives us a different view, but we measure the company itself against its underlying commodity. Usually you see different things on there. And yes, this will be the big guys, the billion-dollar market companies. So this is not the juniors, no explorers. It's just the big, big producers. With that said, guys, you know what to do. Subscribe, like, all that good stuff here. And yes, we have a member section. Should be right next to the subscription button. If it isn't, you should open a tablet or a PC. Usually, again, you can see it there, and not on your mobile phone or iPad. Hopefully that works. But yeah, let's get into business. Here we have Newmont against gold. Long term, this is very, very, very long term. We're talking 50, 60 years basically. And we are very far away from our long-term golden trend line. If I could just, do a bit of effort to really connect the lines of the highs, you can see it here. We are just far away. We have potentially collapsed. This is the 2016, and now ever since March mid 2022, major collapse for Newmont in relation to gold. Basically, I think we're doing some double bottoming here. We've just come so far down that we need to see a bounce, especially given the gold price. The miners need to have some outperformance here. In the shorter term, in the next short term, that's a lazy word to use, but for the next few years, Newmont here should start to outperform a bit. But again, very undervalued against gold. But this chart also shows you that miners is not a long-term hold. The long-term hold is the physical, nothing more, nothing less. And Newmont and the other miners is basically a leverage play that you have on for a given period of time. You don't hold these for 10 years, 20 years. You can clearly see that on the chart here. AG, first Majestic. So this is against silver. 2016 low. We are basically there once again within a very well-defined monthly downtrend. So as long as we're in here, it's not good. But as soon as we start to break, hopefully we can see some spiky movements, as we saw over here when we started to finally break that downtrend into the pivot low and all these connections there. We are very close again to where AG should start to heavily outperform silver. We can only hope. It has been a pain train ever since the silver squeeze. By the way, silver squeeze wasn't a fluke. It had huge success, and many people started to realize what silver is. So this is Fresnillo against gold. Bit of a weird chart, to be honest, but that trend line there coming in, you can see we are very close again to that trend line for connections. And these two here are basically copies. So it's a copy of those two. That one there, takes in the internals. And then you have the big one, the outlier there. But the main takeaway for me in this chart is also the same thing. We have seen a huge collapse for the past 1 year. And there are almost no green candles on the monthly here. I think this is a end of trend capitulation move where usually we see a bottom very shortly. And again, a possible good bottom is that trend line tag, and then we go higher. Again, the downtrend is still very much intact, so it still has a lot of downward momentum, but again, nothing goes in a straight line. And I do think, given all these red candles, and we've basically gone down since 2016. So I do expect a bounce there in relation to Fresnillo against gold. Weird chart here against, this is Goldfields, I think it is called. I can't remember the exact Goldfields something. Weird chart, but again, we have a mega downward channel coming in here. A lot of, breakdown, retesting, and then now we're back above that big level, and now we're basically doing nothing for 4 years. So the more sideways we go, I mean, usually that is a good indicator that we are charging up for the next move, attack that trend line up here. We had the internal, which was pretty well defined. There it is, the breaking out and all the retesting. And I think we're just coiling here. If you go to, I think, the weekly, you can see that we are actually kind of like, you know, starting to charge up here. And hopefully it will be to the upside. The only way I think that if that is the case, that we are, you know, if we're going to the downside, means a big collapse in gold, and then miners will do even worse. But again, gold looks incredibly strong at the moment. This is gold. This is Barrick Gold divided by gold. That's a great sentence. 1985. And then we have 2016. And now we're here at that trend line. All this stuff here is very difficult to chart really, but you have some stuff going on. But again, I didn't want to add it in. We have a big zone here where you can see every time we come in and touch it, we're getting rejected. Hopefully we see a bounce there. Also, if we go to the weekly, you can see, again, some sort of you know, squeezing coming into the downside here. Again, the angle is very, very steep to the downside. So usually you need some time when you leave it before you go higher. So hopefully we are at that big trend line bottom here for Barrick Gold. And finally, that hopefully if we break out of that red wedge right there, it will be, as you know, gold, Barrick Gold outperforming the metal itself. Franco-Nevada, also a big name. Long-term golden uptrend broken, not ideal, but you could see when we broke, it was just boom, a collapse. So again, here we are into some wick support here, and that's also why I have highlighted that we are actually at some support. You can see 2018, 18, the March 2020 lows, and we are basically there once again. Oversold on the weekly, monthly, and the same thing here, heavily oversold on the weekly. So yeah, let's see where that one goes. AEM, I can't remember the name of it. You have to look it up yourself. AEM. Basically, it hasn't done anything against gold for 60 years. Amazing, right? Again, back to the thing, the miners is not a long-term hold. It is a shorter-term-ish, a few years maybe, of momentum play, and then you get out. But here, ever since, this is actually for the past 15 years, we have started to make this pattern there, and you can see this internal red resistance. Hopefully we can break to the upside, and then we can get all the way up to here, and then we will see what happens. But again, I think if we're coming into these highs here, I guess it's the sell. Then we can have a bit of a dribble, and maybe we can break out, maybe. But history says these levels, you sell AEM, and you buy into gold with that, if that is what you want to do, because gold, the physical, will then start to outperform. So you're basically swapping. Wheaton Precious Metals looks like just a regular stock here, just doing some absolutely amazing things in my view. Massive long neckline, inverted head and shoulders, breaking out, and now again we are toying with that neckline here, just like we did on gold with the all-time high from 2011. But also here we have, you know, a potential inverted head and shoulders. So again, Wheaton Precious Metals has actually done, I'll not call it all right, but most of these stocks has gone more down, where Wheaton Precious Metals basically for the past 15 years has more or less gone sideways, especially the last 4 years here. But if we can start to see a break out of these levels, I mean these trend lines, Wheaton Precious Metals will outperform gold by a long shot, and gold looks incredibly well. So you can do your own thinking on that one. This is a number. I don't know the name of it, but it is the biggest gold miner in China, divided by gold. And also here, we have a flat top here with a rising bottom. You can see we have a bit of an undercut, and now we're back in. But usually, again, with a higher percentage, these flat tops, and a rising bottom is where you break to the upside. But we did have a little bit of a spill here, but we are back in. So that is good to see. So again here, when and if we break these levels, I mean, that's just when this goes on a tear, and you should hold it for like a year or two, depending on on the momentum and so on. But again, not the worst setup here in relation to gold. Then we have NESRF. I cannot remember the name of it. You have to look it up yourself because I cannot see it here. But basically, we have a shorter term-ish. Still, it is 5 years long. But again, a very skewed inverted head and shoulders, and we are about to break out here, it looks like. So this company, in relation to gold, is about to outperform heavily. What I know is that this company, from what I have read, is, I think, the biggest company in gold in the world. Don't correct me on that one. But again, it's I think it's 10 or 15 billion dollars market cap, and we are just on the verge of breaking out. No confirmation yet or anything, but again, that beautiful, and then you can add on top, you know, the measured move. So we are looking at an outperformance, even for this pattern here, but probably higher for 100%. And I do think in the meantime, when we see this run in the minor, gold will not be where it is today at roughly 2,200. It will probably be closer to, I don't know, 3K, whatever. So again, this is more than a double coming for this stock. And it's a big stock, by the way. So you don't get 10x on these big companies. But they are producing a lot of gold compared to, you know, juniors and explorers and all that good stuff. So yep, that is it. Bit of a different video, but I hope you liked it. And if you want to see more of this, I can do, you know, same thing for uranium. I've done that before on uranium miners, where we look at the ratios on different, you know, miners against the underlying commodity. Let me know in the comments below, guys. I hope you like this different view. So yeah, have a great day, guys, and we will see you tomorrow for yet another day in the markets. Bye.